Right. So we are studying the chapter on the company audit. And in the company audit, we studied regarding the qualifications and disqualifications of the company auditor, then regarding the appointment of the company auditor. And now we are talking about the removal of the company auditor, right? What we have discussed, removal of the auditor by the members before the expiry of his term. That is, you say right now at this moment I want to remove the auditor of the company, but even that takes 2-3 months, to remove the auditor of the company. And now coming to the second situation, removal of the auditor at the expiry of his term before completion of the tenure. That means now you don't want to remove the auditor at the EGM, you want to remove the auditor at the AGM, but before completion of his tenure. Okay, he's just finished 3 years of audit, but before that only, before he completes his 10 years also, you want to remove him as an auditor of the company. So for this, what is the trigger point? It says a special notice is required to be sent by the members to the company for the removal of the auditor. Right, the special notice is to be received by the company from the members. Then what does it say? Special notice is what? SN. Right, then the copy of the special notice will be sent to the retiring auditor. The copy of the special notice will be sent to the retiring auditor. So retiring auditor, I will call him as the RA. Right, so special notice is to be received by the company. Then what will the company do? Send a copy of the special notice to the retiring auditor. That see, members of our company are telling remove this fellow as the auditor of the company. Are you able to follow it, everyone? Special notice will be received by the members. From the members, it will be received by the company. Then the copy of the special notice is to be sent to the retiring auditor. Then what can the retiring auditor do? He can do RA. Who is RA? Retiring auditor. He can make a representation in writing. It should not exceed the reasonable length. He can request the company that this representation be sent to the members. He can request the company that this representation to be sent to the members, right? Then what does it say? The company must send. If the retiring auditor has made a representation in writing and is requesting the company to send it to the members, the company must send. But say in case if the representation is received too late, or any default of the company, it is received too late or any default of the company, that is why it could not be sent to the members. Then in that, it could not be sent to the members. In that case, what would happen? It would be read out at the meeting. It would be read out at the meeting, and a copy would also be filed with the ROC. Also file a copy of the representation with the ROC if you could not send it to the members. Okay, so what has happened? A special notice is to be received by the company. Then a copy of the special notice is to be sent to the retiring auditor. The retiring auditor can make a representation in writing. It should not exceed reasonable length. Retiring auditor can request that this representation send it to all the members. The company must send unless it is received too late or any default of the company. It could not be sent. Then in that case, it would be read out at the meeting, and even the copy of it would be filed with the ROC. Are you understanding that? Right. And then after that, what does it say? Without prejudice to this right to make representation, the retiring auditor also has a right to be heard orally at the meeting. Right? Retiring auditor, in addition to the right to make the representation, retiring auditor also has a right to be heard, right to be heard orally at the meeting, right? Orally at the meeting. And obviously in the notice of the meeting, the fact that the retiring auditor has made a representation should be mentioned. And if it is noticed that the retiring auditor is abusing this right, is misusing this right of making the representation, unnecessarily he is making the false allegations against the company, then in that case it says an application could be made to the tribunal, and the tribunal may order don't send this representation to the member, and no need to read it out at the meeting also. Why? Because retiring auditor now, instead of using the right to make representation, he is abusing the right. Then what does it say? An application is to be made by the aggrieved persons to the tribunal, and then tribunal may pass an order that don't send this representation to the member, no need to read it out at the meeting. What he is writing in the representation? They are removing me as an auditor because I have detected a fraud, and the fraud is of 400 crore. The management management of the company has taken 200 crore from the company. All this he is writing. Why he is venting? Why he is venting? Because he is being removed as the auditor. And he is telling that this representation you send it to all the members. Company says, how we can send it to all the members? It goes to the tribunal. Tribunal says, yeah, this fellow is saying just anything. No? So then the tribunal may pass an order that don't read out, don't send this representation to the members. Okay. What am I talking about? The removal of the auditor at the expiry of his term, but before completion of the tenure. What is the trigger point? A special notice should be received by the company from the members. Then a copy of that special notice should be sent to the retiring auditor. Then the retiring auditor can make a representation in writing. It should not exceed the reasonable length, and he can also request the company to send it to the members, right? He can also request the company to send it to the members. Company must send unless it is received too late or any default of the company. In that case, it would be read out at the meeting, and also a copy of the representation would be filed with the ROC, right? This is without prejudice to the right of the retiring auditor to be heard orally at the meeting. And in the notice of the meeting, the fact should be mentioned that the retiring auditor has made a representation, and the retiring auditor is abusing the right to make representation. An application can be made to the tribunal, and then tribunal may order, okay, no need to send, no need to read out this representation. So basically, non-technically, if I want to discuss it with you, and non-technically, if I want to discuss this with you, retiring auditor has two rights. Right, basically, retiring auditor, when he's being removed at the AGM of the company, he has two rights. What are the two rights which he has? One, he has a right to give a farewell letter. And this farewell letter, he can tell the company to send it to all the members. And if not sent to the members, then it would be read out at the meeting. If not sent, then it would be read out at the meeting. And in addition to this, retiring auditor also has a right to give a farewell speech. That is the right to be heard orally without prejudice to the right to be heard orally at the meeting. And so basically, retiring auditor has two rights: farewell letter and the farewell speech. You cannot say you gave letter, now you cannot give speech. He can give letter also, and he can give the speech also. But letter, either it would be sent to all the members, and if not sent to the members, then it would be read out at the meeting. Are you able to follow this, everyone? Retiring auditor, right to make representation given to the retiring auditor. Everybody, are you able to follow it? Right to make representation. What are the two rights which are there with the retiring auditor? Farewell letter and the farewell speech. Okay. And then a special resolution would be passed at the general meeting for the removal of the auditor. Right. Then an SR in GM. Right. Special resolution in the AGM for the removal of the auditor. Are you getting this? This is removal of the auditor by the members at the expiry of his term, but before completion of the tenure. Right, at the expiry of his term, but before completion of the tenure. Okay, third one, resignation of the company auditor. What auditor says? I only want to resign. So the auditor sends a resignation letter. Now what does it say? Within 30 days from the date of resignation. Within 30 days from the date of the resignation, the auditor, right, within 30 days from the date of the resignation, the auditor needs to file the form ADT 3 with the company and with the ROC, and in case of a government company also need to file it with the C and AG, that is the Comptroller and Auditor General of India. Right, so what does it say? If auditor resigns within 30 days from the date of resignation, the auditor needs to file the form ADT 3 with the company and the ROC, and in case of a government company, he also needs to file it with the C and AG, that is the Comptroller and Auditor General of India. Say if the auditor fails to file the form ADT 3 with company, ROC or the CNAG, then what is the amount of the penalty which is to be paid by the auditor? In that case, what is the amount of the penalty to be paid by the auditor? 50,000, or the remuneration of the auditor, whichever is less, and 500 rupees for each continuing day of default, subject to a maximum of 2 lakh. At 50,000, or the remuneration of the auditor, whichever is less. And what does it say? 500 rupees per day. Yes, what does it say? For continuing day of default, subject to a maximum of 2 lakh rupees. right? So within 30 days from the date of resignation, auditor needs to file the form ADT3 with the company and the ROC. And in case of a government company, also need to file it with the CNAG. And what if auditor does not file it? Then what is the penalty? 50,000 or the remuneration of the auditor, whichever is less. And what does it say? 500 rupees per day of default, subject to a maximum of 2 lakh rupees, right? So let us again study a situation over here, right? Are you all paying attention? Right. Say auditor of the company resigned on 1st of November 2025. Example. When did the auditor resign? 1st of November 2025. Okay. And now 15th of December 2025, the auditor filed the ADT3 with the company and the ROC. 15th of December, the auditor filed the ADT3 with the, say it's a OGC other than government company. So 15 December, the auditor filed the ADT3 with the company and with the ROC. Okay. And say the remuneration of the auditor is 20,000. Can anybody tell me what is the amount of penalty which will have to be paid by the auditor? Can anybody tell me what is the amount of the penalty which will have to be paid by the auditor? 20,000, 50,000 or the remuneration of the auditor, whichever is less, that is so pakka, 20,000. Now, within 30 days, so it should have been filed by 30th of November. When did he file? On 15th of December. That means 14 days delay. 14 into 5, right? What is that? 7,000. So plus 7,000. That is why 27,000 is the penalty to be paid by the auditor. 27,500. Why? Because you counted 15 days of December. But 15th day to he paid. No, he filed no the form ADT3. You understand? And MCQ comes in the exam like that only. 27,000, 27,500, 28,000 and 50,000. Life is so interesting. You understand that, no? 27,000, 27,500, 28,000, and somewhere your general knowledge also says 50,000 kuch to hai wahan pe. And there is something called as 50,000 which is over there. You know, something like 50,000 over there. And but what does it say? 50,000 or the remuneration of the auditor, whichever is less. Same question. If the remuneration of the auditor was 70,000, then it would have been 57,000. And if the remuneration of the auditor was, say, 70,000, then how much it would have been? 50,000 plus the 7,000. Are you able to follow this, everyone? Okay. Right. So we are studying the nitty-gritties for each one of them. For first one, what did we say? Prior approval of CG and SR in GM. For second one, what did we say? Farewell letter and farewell speech. For third one, what we are seeing? The penalty which is to be paid if he does not file the form ADT3. Are you understanding that? The auditor who's resigned from the company shall file within a period of 30 days from the date of resignation the ADT3 with the company and the ROC. And in case of a government company, also file it with the CNAG. And if the auditor does not comply with the provision, then he is liable to a penalty, which is 50,000 or the remuneration of the auditor, whichever is less. And in case of a continuing failure, with a further penalty of 500 rupees for each day after the first, during which such failure continues, subject to a maximum of 2 lakh rupees, right? So that I have already discussed. This is trending right now in the MCQs. Oh my God, how much they like to ask the question on this one in the exams, right? So resignation of the company auditor, right? Appointment of auditor other than the retiring auditor. Did I discuss it with you? Special notice, copy of special notice, representation, notice, notification to member, copy with the registrar and the tribunal. So that situation 2 I've already discussed with you. Now coming to situation number 4. What is situation number 4? Removal of auditor by tribunal and or CG, right? And this is again a trending. This is trending in the theory part of the paper. That was trending in the Resignation is trending in the MCQ part of the paper, and removal of auditor by tribunal or CG is trending in the theory part of the paper, right? So removal of auditor by tribunal or the CG. What does it say? Anvisha Limited is a company engaged in the business of software development. It is one of the largest companies in this sector with a turnover of 25,000 crore. The operations of the company are increasing constantly. However, the focus of the management is more on cost cutting in the coming years to improve its profitability. In respect of the financial statements which are used by various stakeholders, some fraud was observed in respect of the assets reported therein, due to which stakeholders suffered damages. As a result, those stakeholders applied to the tribunal for change of the auditor on the basis that auditor is colluded in the fraud. That is, he has participated in the fraud. Elucidate. So all this would not have been written also, okay. What they wanted to ask, elucidate the power of the tribunal to change the auditor of the company if found acted in a fraudulent manner as provided under 145, or direction by tribunal in case auditor acted in a fraudulent manner, or what does it say, the tribunal wants to remove the auditor of the company, right? So all this, right? So 5 times in the RTP, 2 times in the exam, the question regarding the removal of the company auditor by the tribunal or the CG, right? So what do we write down over there? Question number 30. Right, removal of the auditor by the tribunal or the CG. Are you getting that, everyone? Removal of the auditor by the tribunal or the CG, right? So what does it say? The tribunal either suo moto, right? So I've just increased the yes, the zoom, I've just zoomed in over there, right? So what does it say? The tribunal either suo moto. Suo moto means on its own or based on an application received from the CG or any person concerned. The tribunal either suo moto or based on an application received from CG or any other person concerned, and the tribunal is satisfied. What is it satisfied about? That the auditor of the company, the tribunal either on its own or based on an application received from the CG or any person concerned, the tribunal is satisfied. What is it satisfied about? That the auditor of the company has acted in a fraudulent manner or has abated, and now abated means assisted, or has colluded in any fraud by or in relation to the company or its directors or officers. Then the tribunal may by order direct the company to change its auditors. Then the tribunal may by order direct the company to change its auditors. What is the first sentence? The tribunal either suo moto, on its own or based on an application received from CG or any person concerned. The tribunal is satisfied, 100% sure. What is satisfied? That the auditor of the company has acted in a fraudulent manner or has abated. Abated means assisted, and colluded means participated. Right? So assisted or participated in any fraud by or in relation to the company or its directors or officers. The tribunal may by order direct the company to change its auditors. Okay. Could the application be received by CG also? Could it be suo moto or any other person, or could it be CG also? Yes. What does it say? If the application is received from the CG and the tribunal is satisfied. If the application is received from the CG and the tribunal is satisfied, then what does it say? The order should be passed within 15 days. And now the another auditor will be appointed by the CG. The another auditor will now be appointed by the another auditor will now be appointed by the CG. Why CG? Because the application is received from the CG. So if the application is received from CG and the tribunal is satisfied, then what does it say? Is the tribunal has to pass the order within 15 days, and the another auditor now will be appointed by the CG. Why CG? Because the application had come from the CG. Then such an auditor against whom the final order has been passed by the tribunal, and a fraudulent auditor, such an auditor against whom the final order has been passed by the tribunal cannot do the audit of any company, right, for a period of 5 years. right, cannot do the audit of any company for a period of 5 years and shall also be liable under section 447. Right, what is 447? Punishment for fraud. Right, we'll study that later in the liabilities of auditor chapter. Such an auditor against whom the final order has been passed by the tribunal, no company audit for him for a period of 5 years. And what does it say? He shall also be liable under section 447. And for civil liability is what? Only the fine and penalty. The firm will be liable. Okay, but for criminal liability, what is criminal liability? Imprisonment. Right, for criminal liability, only the concerned partners will be liable. Only the concerned partner or the partners will be liable for the criminal liability. Right, so civil liability, the firm will be liable, so the entire firm will have to pay the fine or so, but criminal liability, only the concerned partner or partners will be liable. Right, so this is regarding the removal of the auditor by the tribunal or the CG. What does it say? The tribunal either suo moto or based on an application received from CG or any person concerned is satisfied. Satisfied what? That the auditor of the company has acted in a fraudulent manner or has abated or colluded in any fraud by or in relation to the company or its directors or officers. It may by order direct the company to change its auditors. If the application is received from CG and the tribunal is satisfied, the order has to be passed within 15 days and the new auditor will now be appointed by the central government. Such an auditor against whom the final order has been passed by the tribunal cannot be appointed as an auditor of any company for a period of 5 years and shall be liable under section 447. And for civil liability, the firm will be liable, whereas for criminal liability, only the concerned partner or partners will be liable. Okay, right. So is that a wonderful chart over there regarding the removal of the company auditor, right? So we've prepared a chart regarding the removal of the company auditor. Yes. Hmm? Hmm. No, it's for particular auditor. He cannot do the audit. Like NFRA order, it debarred the CA from doing the audits. Right, so like that, it will be the order against the auditor over there. Okay, right. So we've completed our discussion of section 140, which is regarding the removal of the company auditor. Right, this is an important one. 5-star W. And you need to do the writing practice for this one. Are you all with me? Tribunal either suo moto or based on an application received from CG or any person concerned is satisfied. No need to talk in the class. What does it say? That the auditor of the company has acted in a fraudulent manner or abated or colluded in any fraud in relation to the company or its directors or officers. It may by order direct the company to change its auditors. What does it say? If the application is made by CG and the tribunal is satisfied, then the order has to be passed within 15 days and then the new auditor will be appointed by the CG. Right? Such an auditor against whom the final order has been passed by the tribunal not be eligible to do audit of any company for a period of 5 years and shall be liable under section 447, and the liability will be of the firm and every partner of the firm. But for criminal liability, only the concerned partner or partners will be liable. Right, for criminal liability, only the concerned partner or partners will be liable. Are you understanding that? Removal of auditor by tribunal or CG. Right, so that completes our discussion of section 140, which is regarding the removal of the company auditor. Are you all with me? Right, so one we discussed regarding the appointment of the company auditor. Before that, we prepared one chart regarding the qualifications and disqualifications of company auditor. Then regarding the appointment of the company auditor. Then regarding the removal of the company auditor. Now we come to a very small section over there, just a passing reference. Section 142, which is regarding the auditor's remuneration. Right, auditor's remuneration. So what is the golden rule for the auditor's remuneration? The auditor's remuneration is to be decided by the company in the general meeting or in the manner determined therein. right? It is to be determined by the company in the general meeting or in the manner determined therein. So either the shareholders can decide the remuneration of the auditor, or they can decide. Who will decide? Either the shareholders of the company can decide the remuneration of the auditor, or they can decide. Who will decide? Board will decide, audit committee will decide, MD will decide, right? So who will decide the remuneration of the auditor? Company in general meeting or in the manner determined therein, right? Whereas the first auditor, when he is appointed by the board of directors, then his remuneration could be fixed by the board. Then his remuneration could be determined by the board. So when first auditor is appointed by the board, his remuneration could be fixed by the board. Otherwise, what is the general rule for the remuneration of the company auditor? Who decides? Company in general meeting or in the manner determined therein, right? Government company, right? Who appoints the auditor for a government company? Subsequent auditor. Government company, who appoints the subsequent auditor? The C and AG. Who decides the remuneration of the auditor? Subsequent auditor. Array. Government company, who appoints the subsequent auditor? C and AG. Who decides the remuneration of the government company auditor? Company in general meeting or in the manner determined therein. That is what I am teaching you. Though CNAG appoints the auditor, who decides the remuneration? Company in general meeting or in the manner determined therein. Other than government company, who appoints the auditor? Members. Other subsequent auditor. Why board is coming in the picture? You understand, first auditor to likh diya na. When first auditor has been appointed by the board, the remuneration will be fixed by the board. That is one exception. Otherwise, what is the thumb rule? What is the golden rule over there? Who will decide the remuneration of the auditor? Company in general meeting or in the manner determined therein, right? So now, other than government company, who appoints the auditor? Subsequent auditor. Members. Who will decide the remuneration? The members, or they can decide. Who will decide? Right? So company in general meeting or in the manner determined therein, right? So that is section 142 regarding the remuneration of the auditor, right? Remuneration will be fixed in the general meeting or in the manner determined therein. And when the first auditor has been appointed by the board may fix the remuneration. And any additional services being provided by the auditor, it says they can decide upon the audit fee separately for those additional services provided. Like he's also doing the tax audit or that out of pocket expenses and all of that, that can be additionally included in the audit fee, right? So that is section 142, which is regarding the auditor's remuneration. Now coming to the next section over there. Everybody over there? Right, now coming to the next section, section 143 of the Companies Act 2013, which is regarding the rights and duties of the company auditor, right? It is regarding the rights and the duties of the company auditor. Okay, so first we will look into the rights and then we will look into the duties of the company auditor, right? So what are the rights of the company auditor? Everybody, are you all with me? Yes, what are the rights of the company auditor? One, to access the books of account and also to obtain the information and explanations from the management. Second right of the auditor is to report to the members. It's not only a right, it's also a duty to report to the members. Third right of the auditor is to receive the notice and attend the general meeting, right? Receive notices and attend general meeting, not only AGM, even the EGMs of the company. Then another right of the auditor is to exercise the audit lien. But what we had studied, ethical standard board, what did it say? Auditor shall not exercise the right of exercising the audit lien. He cannot retain the books of account for non-payment of the fees. But anyways, it's one of the right of the company auditor. Then we also have the powers, that is rights only. Powers of the C and AG, Comptroller and Auditor General of India in case of the government companies, right? So we also have the powers of C and AG in case of the government companies, right? So these are first the rights of the company auditor. What are the rights? Access books, obtain information, explanation, right to report to the members, members, right to receive notice and attend the general meeting, attend either by himself or through his AR. So unless exempted by the company. So who can say कि it's okay if you don't come for the meeting? The company, right? So unless exempted by the company, attend either by himself or through his AR. So can you send an article to attend the general meeting on your behalf? No. It says it has to be a chartered accountant, a person who is qualified to be appointed as an auditor to attend any general meeting and participate in that part of the discussion which concerns him as an auditor. Right, then the right to exercise the audit lien, and then the powers of CNAG in case of the government company. Right, what are we discussing? Section 143, which is regarding the rights and duties of the company auditor. Right now we are looking into the rights. After the rights we look into the duties. What are the rights? Right to access books of account and obtain information explanation, right to report to the members that the accounts examined by him give a true and fair view. Do you remember the two gives? Give the information required by the act in the manner so required and give a true and fair view. You remember opinion paragraph, whether the financial statements give the information required by the act and also whether they give a true and fair view, right? Then right to receive notice, all notices should be received by the auditor and unless exempted by the company. So who can exempt him from attending the general meeting? The company, right? So he has to ask for the company. Unless exempted by the company, attend either by himself or through his authorized representative who is also qualified to be appointed as an auditor, any general meeting and participate in that part of the discussion which concerns him as an auditor. So say in the general meeting they are discussing financial statements and audit report. Can auditor participate in the discussion? Yes, but say in the general meeting they are discussing whether how much dividend should be declared. So should auditor participate in that discussion? No, that does not concern him as an auditor. Are you understanding that? Okay. Then right to exercise audit lien due to the non-payment of fees. Now, company law is not saying that auditor can exercise audit lien. It is as per the general principles of law that, if I have to receive money from somebody and that somebody does not give me the money, I can keep their property in my possession. It's in the general principles of law that if I have to receive money from somebody and that somebody is not giving me the money, what I can do, any of their property, I can keep it in my possession. Right. So what does it say? However, these auditors lien is conditional. What is the condition associated with audit lien? It says the Institute of Chartered Accountant of England and Wales have put some conditions associated with the audit lien. One, what does it say? The books on which you are exercising the lien, right, they should belong to the company. They should belong to the client. Then they should not have come to the possession of the auditor through any illegal or irregular means. So you cannot catch the client at gunpoint and then take away their books of account. No, should not. Or you cannot go in the night and rob the books of account of the company and come. And so they should not have come to the possession of the auditor by any illegal or irregular means. Then what does it say? Only so much of the books can be retained depending on the work which he has done on the same. Say how much of your fee is outstanding. You say, ma'am, 300 rupee fee is outstanding. Then what you do for 300 rupee fee which is outstanding, you get one tempo full of vouchers from the client place. Client is very happy. They say permanently keep it, never give it back to us. And so some work should have been done and only connected with the work for which the fee has not been out is which has not been paid, right? So your fees are outstanding for what? Tax audit. What you did, all your stat audit, what books of account, those you retain. No, it should be connected to the work which is for the which the fees have not been paid. Are you understanding that? Okay, right. Now here there is a further challenge. What is the further challenge over here? Later on, we are going to study section 128, which is regarding the books of account. And section 128, everybody pay attention, listen to me. Right, section 128 talks about the place of maintenance of the books of account. Right, place of maintenance of the books of account. Where can a company maintain its books of account? It says where should it maintain? Either at the registered office or at a place decided by the board. And within 7 days of the passing of the board resolution, the new address is to be intimated to the ROC. Right, within 7 days of the board resolution, the new address is to be intimated to the ROC. Are you understanding? So what is the place of maintenance of of books of account, by default you should keep it at the registered office. If you want to keep it at any other place in India, for that it says a board resolution should be passed, and within 7 days of the board resolution the new address should be intimated to the ROC. Are you understanding that? Okay. Now what does it say? Auditor wants to exercise audit lien. So obviously auditor is going to take the books to the auditor office. In that case, auditor is going to take the books to the auditor office. Okay. But now where should the books of a company be kept? Registered office or place decided by the board. Now board has not decided auditor office. So technically, if auditor wants to exercise audit lien, first the board has to pass a board resolution, and only then auditor can exercise audit lien. So technically, if an auditor wants to exercise audit lien, first the board needs to pass a board resolution. Okay, now the books of the company have been maintained at the auditor office. Within 7 days, the new address is to be intimated to ROC, and only then the auditor can exercise the lien. But you know which board will pass a resolution in that case? You understand? And nowadays, because of electronic books of account, more difficult for the auditor to exercise the lien. And more so, the ethical standard board of ICAI has given a decision that auditor cannot exercise lien due to the non-payment of the fees. And that it is 100% theoretical concept, no practical applicability anywhere. So what you can do, only way for the auditor is to recover his fees on a progressive basis. What is progressive basis? As and when you finish some part of your work, you keep on recovering your fees from the client. Say, you know, your fee is 10 lakh and you finish 20% of the work. So collect 2 lakh fee from the client. You finish more 20% of the work, collect more 2 lakh fee from the client. You understand? So that you don't incur the bad debts, and so that you don't have the bad debts for your CA firm. Are you able to follow this, everyone? Okay. And can auditor exercise lien on his working papers? Seriously, guys, seriously. ऐसे मतलब तो कुछ सोचते ही नहीं है, मतलब without any thought. Can auditor exercise lien on working paper? Yes. अरे किधर से yes? For what are you saying a yes? For what are you saying the yes? Can auditor exercise lien? So exam में, no, whichever answer comes to your mind first, don't write that one. And at least those who said yes right now, this is my high advice to all of you. You understand? The moment you think this is the answer, that is not the answer. Be sure about it. Right? Anything else after that, opposite of that, you write in your paper. Okay. Anyways, right. Can auditor exercise lien on his working papers? No, there is अभी भी yes बोल रहे. Oh my God. Right. Okay. There is no question of exercising lien on the audit working papers, because working papers is the property of the auditor only. Somebody is not giving me the money. Okay. So I say, till the time you don't give me the money, I will not use my laptop. They say, don't use. What is my problem? So you understand, no, there is no question of exercising the lien on the audit working papers, because they are the property of the auditor. Is it clear to everyone? Yes. So that is regarding over there, regarding the rights of the company auditor. But we are yet to discuss one more right of the company auditor, which is regarding the powers of CNAG in case of the government company. Right. So now coming to one retail question over there, powers of the C and AG in case of the government companies, right? This is an overlapping discussion which will also come in our chapter of the audit of the public sector undertakings. That time I will tell you that this we have already discussed in company audit chapter. At that time, I will tell you that this we have already discussed in the company audit chapter. Right. So powers of CNAG in case of the government company. Right. What are the powers of CNAG? First power of CNAG we've already seen. What is the first power which CNAG has in case of the government company? To appoint the first auditor, and also to appoint the subsequent auditor in case of the government companies. And CNAG, you can also issue the directions to this auditor regarding the work to be done. And the auditor so appointed will submit his report to the CNAG. And now CNAG, within 60 days from the date of receipt of the report, within 60 days from the date of the receipt of the report. Now CNAG within 60 days from the date of receipt of the report, they can conduct a supplementary audit of the financial statements of the government company. They can conduct a supplementary audit of the financial statements of the government company, and they can also issue a supplementary report and also issue a supplementary report. So conduct a supplementary audit and also issue a supplementary audit report. This audit report will be now attached to the main audit report of the company. It is like an additional report. You understand? No, just as you have Caro reporting in addition to the main report, if CNAG issues a supplementary report, will that report also go to all the shareholders? Will that report also go to the debenture trustees of the debenture trustee, all the trustees over there? Yes. Right, so it says issue a supplementary audit report, right? So conduct a supplementary audit. Either they can do the supplementary audit by, they can do the supplementary audit by authorizing any person on their behalf to conduct the supplementary audit, and then they can issue a supplementary audit report. And in addition to this, in case of government companies, CNAG has the power to conduct the test audit of the accounts of the government company. In addition to this, CNAG has the power to conduct the test audit of the accounts of the government company. So look at the beauty of these sentences. Supplementary audit of financial statements, test audit of the accounts of the government company, and in addition to that, appoint the first auditor, subsequent auditor, and issue directions to this auditor, right? And when I come to PSU chapter, this is an ATF question over there in the PSU chapter. Right, powers of CNAG in case of the government company. What are the powers which CNAG has in case of government company? To appoint the first auditor within to appoint the first auditor within 60 days from the date of registration of the company, and to appoint the subsequent auditor within 180 days from the commencement of the financial year. And can they also issue directions to this auditor regarding the work to be done? Yes, and once they receive, CNAG receives the report within 60 days from the date of receipt of the report, they can conduct a supplementary audit of the financial statements by any authorized person, and they can also issue a supplementary report. Will this report go to every member of the company? Yes, even the supplementary report is to be sent to every member of the company, right? Also to be sent to every member of the company along with the main audit report. And in addition to this, in case of government company, CNAG also has the power to conduct a test audit of the accounts of the government company, right? Also has the power to conduct a test audit of the accounts of the government company, right? What are we discussing? The powers of CNAG in case of the government companies. Is it clear to everyone? What are we discussing as such? The rights of the company auditor. What are the rights? Right to access the books of account and information explanation, right to report to the members, right to receive notice and attend the general meeting, right to exercise the audit lien, and the powers of CNAG in case of the government company, right? So right to access books and also obtain information as he may think necessary, receive notice and attend general meeting unless otherwise exempted by the company, attend either by himself or through his AR, who is also qualified to be appointed as an auditor, any general meeting, and have a right to be heard at such meeting, and at any part of the business which concerns him as the auditor. Then he also has a right to report to the members on the accounts examined by him. Also has a right to exercise the audit lien. But there are some conditions associated with audit lien. And then I told you, it is not practical, to exercise audit lien. Why? Because where books are to be kept, registered office or the place decided by the board. Right, and then audit documentation, there is no question of exercising the lien, as audit documentation is the property of the auditor. And then we have the powers and the rights of the CNAG. What are the powers of CNAG? Appoint the first auditor and the subsequent auditor, then with and also issue the directions to this auditor regarding the work to be done. Then within 60 days from the date of receipt of the report, they can conduct a supplementary audit by any person authorized in this behalf. also they can issue a supplementary audit report. Yes, this report also has to go to every member of the company. What does it say? Every member of the company, every trustee of the for the debenture holder for any debentures issued by the company, and to all other persons other than such member or trustee, being the person so entitled, and also be placed before the AGM at the same time and the same manner as the audit report. So the supplementary audit report has the same status like a true and fair audit report. And the main audit report, same status also given to the supplementary audit report. And in addition to this, CNAG, in case of government company, also has the power to conduct the test audit of the accounts of the government company. Right? CNAG also has the power to conduct the test audit of the accounts of the government company. Is it clear to everyone? The rights of the company auditor? Okay. Now, once that we finish with the rights of the company auditor, now let's come to the discussion regarding the duties of the company auditor. Are you all with me? Yes, everyone, are you all there? Yes, now we discuss regarding the duties of the company auditor, and we are going to discuss the 8 duties of the company auditor. What is the first duty that we are going to discuss? It is duty as to inquiry under section 143 subsection 1. Right, then second duty is duty as to reporting under section 143(3). Right, next duty, duty to report on the additional matters specified by the CG 143(11). Duty to report on the additional matters specified by the CG 143(11). Then next duty, duty to sign the audit report. Right, duty to sign the audit report, which is actually given under section 145. Right, 145. Then next duty of the company auditor is the duty to give reasons. Duty to give the reasons for the qualifications or the adverse remark in the audit report. That is 143(4). And that is 143(4). Then next duty of the company auditor, duty as to the branch audit. Right, the duty as to the branch audit 143 subsection 8. Right, the next duty, duty to comply with the auditing standards. Duty to comply with these auditing standards, that is SA 143 subsection 9 and subsection 10. And last duty of the company auditor, duty to report the fraud to CG, central government, that is 143(12). Right, duty to report the fraud to CG. Right, so these are the 8 duties of the company auditor which we shall now discuss. Right, duty as to inquiry, duty as to reporting, duty to report on additional matters specified by the CG, then duty to sign the audit report, then duty to give the reasons for the qualifications, adverse remarks in the audit report, then duty as to branch audit, duty to comply with the auditing standards, and duty to report the fraud to CG. Yes, everyone, all of you with me? Right, so now duty as to reporting on additional matters specified by the CG. Under this power given to CG, the CG has issued the CARO 2020, and we know that there are 21 clauses of reporting under the CARO 2020, right? Central government has been given the power, and under this power given, the central government has issued the CARO 2020. Then duty to sign the audit report. What does it say? Any person who is qualified to be appointed as an auditor under 141(1) and 2, right, shall have the right to authenticate any document which is required to be signed by the auditor of the company. So any document to be authenticated by the auditor, it should be a person who is qualified under 141(1) and 2, right? Duty to sign the audit report. Otherwise, in ethics, you will be guilty of professional misconduct under 12(1)(1), है ना, not being a member or being a member but not being his partner to sign on his behalf. Are you understanding that? Yes. Then duty as to branch audit, we'll discuss it separately. Right? Are you listening to me, everyone? Okay. Duty to comply with auditing standards. Have we written this in our audit report? SRES, basis for opinion paragraph, SRES, SA 700. Right? What was the first test for? We have conducted our audit in accordance with the standards on auditing specified under section 143(10). Right, so duty to comply with the auditing standards. Then duty to give reasons for qualification in the audit report. So in case if I'm modifying my opinion, do I put a basis for modified opinion paragraph in my report? And in that report, what I first write down, that paragraph, the matters which give rise to the modification. Right, so this comes from SA 705, right, modifications. And in case if there is a modification, what I do, I put basis for modified opinion. And in that basis for modified opinion paragraph, what is the first thing I write? The matters which give rise to the modification. Right, the matters which give rise to the modification. Okay, right. So now we are left with discussing 4 duties over there. Duty as to inquiry, duty as to reporting, duty as to branch audit, and duty to report the fraud to CG. Are you all with me? Yes. So now we will discuss the 2 mega ones over there. Duty as to inquiry and duty as to reporting, both of which are ATF, super duper important. Right, duty as to inquiry and the duty as to reporting. So duty as to inquiry under section 143(1) and duty as to reporting under section 143(3). Duty as to reporting under 143(3). Under 143(1), you have 6 points of inquiry, and under 143(3), you have the 10 points of reporting. Okay, so what is first difference? Okay, here there are 6 points, here there are 10 points. What is the next difference? Okay, these 6 points, I will make an inquiry. If I have no finding, there will be no reporting. Only if there is an adverse finding, only then auditor you will report. So inquiry, I will inquire about these 6 points. If I find anything, I will put in my report. If I don't find anything, I will not mention about these 6 points in my report. Something like the fundamental accounting assumption. If it is followed, no disclosure is required. If it is not followed, then a specific disclosure is required. But duty as to reporting, these 10 points, whether I have a finding or I don't have a finding, I always need to report. Do you understand the difference between 143(1) and 143(3)? Here there are 6 points, there are 10 points. These 6 points I will inquire. If I have no finding, no reporting. However, if I have a finding, adverse finding, only in that case I need to report. Are you understanding that? Okay. Now, say a company is having surplus funds of 200 crore. Okay, example, say a company, Growth Limited, is having the surplus funds of 200 crore. Now, what are the options? Like, how can the company spend the surplus funds of 200 crore? Say they can purchase a plant and machinery. Example. Or what they can do, they can give the bonus to their employees, or they can declare the dividend, or they can invest in some subsidiary company or so. Are you understanding? These are the options. Like, you have 10,000 rupees with you. Now what to do with that 10,000 rupees is your decision. You know what to do with that 10,000 rupees is your decision. Okay. Now here, who is running the company on behalf of the shareholders? The management. And now what management has decided, that these 200 crore, we will purchase a new plant and machinery. So when auditor went for the audit, what he came to know, that management, out of the 200 crore surplus funds they have purchased a plant and machinery. So what I have to do? Vouching verification of the plant and machinery. Okay, you know, whether the data, the installation charges, have they been added, then the purchase of the machinery, then also the purchase order, quotation, accounting entry, disclosure, depreciation. I need to check for all of that. I need to check for the compliance with the AFRF. And in case if AFRF is not complied, I'll have to modify my opinion. Otherwise, what I will say, true and fair view. Okay, the machinery has been properly accounted. But in my report, can I so say, okay, management, you have have taken the most wrong decision by deciding to purchase plant and machinery. It would have been 100 times better for you had you invested in a subsidiary. As a statutory auditor of a company, am I supposed to make this type of comments in my audit report? Or say I come to know that the company has declared dividend and I say, management, how could you even dream of declaring dividend? You've taken a wrong decision by deciding to declare the dividend. No. Yes, as a statutory auditor, do I have these rights to comment on the decision making of the management? No, we don't have a right to comment on the decision making of the management, because what is the thumb rule? As an auditor, he is not concerned with the propriety of business conduct. Propriety means it talks about the governance, the control. An auditor, he is not concerned. Proprietary is different. This is propriety. He is not concerned with the decision making of the management. He is not concerned with the decision making of the management. Are you understanding that? So whether company gives a secured loan or it gives an unsecured loan, is it my concern? No. Whether they purchase a plant and machinery or whether they give bonus to employee, is it my concern? No. What is only my concern? That it should be as per AFRF. The accounting disclosure should be as per the AFRF. So, by default, does an auditor look into the propriety of business conduct? By default, is a statutory auditor required to look into the propriety of business conduct, the decision making of the management? No. But where company law specifically tells us to look into matters of propriety, there we look into the matters of propriety. And one of the area where company law tells us to look into matters of propriety is 143(1). Because by default, you say, I have nothing to do with the prudence or the imprudence. And with the prudence, it says what brain or what no brain, the prudence or the imprudence of the decisions of the management. I have nothing to do with it. I just have to check AFRF true and fair view. And if there is a loss, whether it is properly shown. If there is a profit, is it properly accounted for? Is it clear? Am I concerned? But can I give a suggestion? Why did you purchase plant and machinery? You should have invested in a subsidiary? No. Right. So now these are the points of propriety over here. Okay. By default, are you required to look into propriety of the company? No. But where company law specifically tells you, okay, CA, please look into propriety. Then will you look into propriety? Yes. What is the first point where they tell you to look into propriety? Whether loans and advances made by the company, are they properly secured, and the terms and conditions thereof, are they prejudicial to the company's interest? Something what we had studied yesterday in clause 3B of the CAR. Right? Loans and advances, are they properly secured? You say, ma'am, what I have to do? They have given a loan of 20 lakh. They have taken a security of 20,000. Rate of interest is 0.01%. What is that for me to do? No, it says whether loans and advances, are they properly secured, and the terms and conditions thereof, are they prejudicial to the company's interest? Prejudicial means detrimental, harmful to the company's interest. Auditor, you need to make an inquiry. Auditor, you need to make an inquiry. Next one, transactions which are represented merely by book entries. You remember book entries, or should I remind you? Management override of control. Sitting, what to do? Pass journal entry. You say, ma'am, I never in my life passed an entry for impairment of asset. Today I wish to pass that entry. So that's why. Transactions which are represented merely by book entries. Again, whether they are prejudicial to the company's interest. Are they detrimental? Are they harmful to the company's interest? Okay. Then, where the company is not an investment or a banking company. So obviously this is not applicable to investment banking company. Latest, RTP, they put this in the MCQ. What they said, where the company is not an investment or a banking company, where the shares, securities, debentures have been sold at a price less than the price at which they were purchased by the company. Right? So that means what? Investments you're selling at a loss. You purchased your investments for how much? 100 lakh. Right? 100 lakh. And at what price are you selling those investments of yours? Say 80 lakh. So are you selling your investments at a loss? Yes, so it says why? What is this urgency? Is it an indication of a liquidity crisis in the company that the time has come for you to sell your investments at a loss? But do you need to make this inquiry in case of investment company, banking company? No. And that is what students miss in the question. What they say, yes, the auditor needs to make an inquiry of the same under 143(1). No, auditor needs to make an inquiry. It says this is a matter which should be reported to the central government. It says no inquiry is required to be made by the auditor. And it says this is the matter to be checked by the company secretary. Some four options they create over there. Now, generally our knowledge, it comes overflowing. Na? Our knowledge says, loans, shares, securities, debentures have been sold at a price less than the price at which they were purchased. So yeah, auditor has to make an inquiry of that under 143(1), and we tick A. But we don't say that. They say in the beginning that A Limited is an investment company. Array, then if it is an investment company, then 143(1)(c) is not applicable, because what does it say? Where the company is not an investment or a banking company, shares, securities, debentures have been sold at a price less than the price at which they were purchased by the company. Then what does it say? Whether loans and advances have they been shown as the deposits? I explained this to you yesterday, right? Okay, I have given a loan to somebody, but what I'm saying, no, I've not given a loan. I've kept a deposit with that person. So that is window dressing, right? So inquire whether any loans and advances have been shown as the deposits. Next one, what does it say? Whether any personal expenses have they been charged to the revenue account? Whether any personal expenses have they been charged to the profit and loss account, revenue account. So does that mean that no personal expenses can be charged to revenue account? Does that mean that no personal expenses can be charged to revenue account? No, you need to look into the policy of the company. As per the policy of the company, certain personal expenses are allowed. You understand? You having tea, coffee in office, that personal expense, is it allowed to be charged to company account? Yes. You traveling along with you, the company policy says that your spouse can also travel along with you. So that personal expenditure, is it allowed to be charged to revenue account? Yes. But certain personal expenses which are not as per the company policy also, those if they are charged to revenue account, you need to inquire about those over here. Right. And what is the last one? If the company has allotted the shares during the year for cash, then what does it say? Whether the cash is actually received. If shares have been issued during the year for cash, auditor, you inquire whether the cash is actually received. And if shares have been issued for consideration other than cash, then in that case, what does it say? Whether the position shown in the balance sheet, whether it is correct, whether it is regular, and whether it is not misleading. Whether it is correct, whether it is regular, and whether it is not misleading. And if shares have been issued for cash, then check whether cash is actually received. Shares have been issued for consideration other than cash, then check whether the position shown in the balance sheet, is it correct, is it regular, and is it not misleading. Okay, so you ask company, did you issue any shares for other than cash? They say yes, we issued shares for other than cash. So you ask them, to whom did you give the shares? They say we gave this shares to a supplier from whom we purchased a plant and machinery. So what accounting entry will be passed? Plant and machinery account, debit to equity share capital account. Is it right? So auditor says no problems. He says, no, we were telling the supplier take the cash, but he said, no, I want equity of your company. That is why, we gave him the equity of our company. And so auditor says, fair enough. You might have given him the equity. Let me come and check your plant and machinery. I want to do the inspection. Say it is 100 crore. And I say, what is the value? It is 100 crore. So auditor says, I want to inspect this machinery. What do they tell auditor? Auditor, tomorrow. And auditor, tomorrow morning, 10 o'clock, 100%, I will show you the plant and machinery. Right? Again, auditor says, I want to inspect the plant and machinery, give me the supporting document, show me the contract agreement wherein you've issued the share capital, and the return on allotment, shares which have been allotted. Nothing. Nothing. Yes, what does it say? Whether any plant and machinery has been purchased? No. Whether any share capital has been issued? No. What are they doing? Mere window dressing. And this is such a wonderful way of doing window dressing, because see, here you are increasing the equity of the company, and here you are increasing the assets of the company. So no debt or anything is also increasing. So the picture looks more rosy, no? More better window dressing done, more better Christmas tree decoration done. Are you able to follow that? Right. So it says, in case if shares have been issued for consideration other than cash, then in that case, whether the position which is shown in the balance sheet, is it correct? Is it regular? And is it not misleading? Right? These are the 6 points of inquiry under 143.1. What are the 6 points of inquiry under 143.1? Coincidence. What is the coincidence? A for advances, B for book entry, C for company, D for deposits, E for expenses, and F for fake shares. Right? F for fake shares. Right? Duty as to inquiry, 143.1. 6 points of inquiry. Do you always report on these 6 points? No, only if there is an adverse finding, only in that case you report. Only if there is an adverse finding, only in that case you report. No adverse finding, no reporting. Right? No adverse finding, no reporting. Right? So no adverse finding, no reporting. Are you getting? Only if there is an adverse finding, you report. A for advances, B for book entry, C for company, D for deposits, E for expenses, and F for fake shares. Are you getting that, everyone? Right. Will these points always be seen in the audit report? No. Whenever there is a adverse finding, only then these points will be reported. Okay. Now coming to duty as to reporting. First, let us have a look at the question bank. Right. So duty to inquire on certain matters. A for advances, B for book entry, C for company, D for deposits, E for expenses, and F for the fake shares. Okay. Right. So let us come to the question bank. Question bank, there is one question regarding the audit lien. Right. There is one question over there regarding the audit lien. And then question number 32. Right. So audit lien, what is that? Question number 31. Right. So wherever in our books we have the audit lien, right, what we can write over there? Question number 31. And then after that we have the duty as to inquiry, where we can write down question number 32. Right. Question number 32 and a few others also. Right. 32. T and Company, a firm of CA, has been appointed by CNAG to conduct the stat audit of the Rare Airlines Limited, a public sector company. They would like to check certain mandatory propriety points. Does everybody understand this propriety now? Right, propriety decision making as required under section 143.1. List the areas to check to meet these requirement, or briefly explain the areas of propriety under 143.1. So one, what you have to write down is the A, B, C, D, E, F, and a duty as to inquiry on certain matters. And then they have given the further points of the checking. Are you understanding that? Right. So first you will write down. So how many times question asked in the exam? 3 times. So ATF, and so many times in the RTP also. Right. It may be appreciated that the terms of loan include such matters such as the security, interest, repayment, and other business consideration. The auditor has to inquire whether the terms can be adjusted as prejudicial to the legitimate interest of the company or its shareholders. This is a process of judging a situation by reference to certain objective standards or reasonableness, whether the terms entered into are prejudicial or not, and not only to the company but also to the shareholders. So that is first one. Then this proposition has got to be inquired into by reference to the effects of the book entry unsupported by transactions on the legitimate interest of the company. The auditor has to exercise his judgment based on certain objective standard. It is also possible that some transactions may not adversely affect the interest of the company. The auditor has to judiciously consider what does and does not constitute the interest of the company. So that is B. C. Then apparently this is a matter of verification by the auditor. The intention, however, is not known whether loss has occurred due to the sale. The auditor is required to inquire into the circumstances of the sale of investments that resulted in loss. Okay? Is it a liquidity crisis in the company that you had to sell your investments at a loss? You remember that? Okay, obviously the duty cast on him is propriety based, reasonableness of the decision to sell at a loss. It involves exercise of the judgment having regard to the circumstances in which the company was placed at the time of making of the sale. Then after considering the propriety element, rationalizing the proper disclosure of the loans and advances given by the company is made. And D5, it is an accepted principle that expenses that are not business expenses should not be charged to revenue. The effect of charging personal expenses to the business is to distort the profitability of the company and to secure a personal gain at the cost of the company. Obviously, propriety is involved in this. Charging personal expenses to business account is highly improper and abusive. Hence, this is provision. And then last one, a control has been set up to verify the receipt of the cash in case of allotment of shares for cash, and further in case if cash is not received, the books of account and the statement of affairs show a true and fair picture. Right, so first you have to write down the points and what is the reasoning behind inquiry for each of this point is also what is written in the answer over there. Are you understanding that? Okay. Then question number 33. Raj, the engagement partner of ROK company in connection with statutory audit of Varia Limited, had assigned the responsibility of inquiring into propriety matters of the company as required by 143(1) to Samay, an engagement team member. Samay, while making the inquiry, has having the following queries as documented, tabulated below, which he ought to get resolved from Mr. Raj. What documents to be seen in case of loan given by the company in lieu of hypothecation of goods from lender as a security for the purpose of reporting under 143(1)(a)? Then what shall be the cost of debentures and bonus shares sold by the company for which the cost is not ascertainable for the purpose of 143(1)(c), that is loans and share securities debentures have been sold at a price less than the price. And what the shares allotted by Varia against a loan taken by it from an NBFC can be considered to be allotted for cash for the purpose of 143(1)(f). Right, 143(1)(f). Assuming that you are Mr. Raj, the engagement partner, please provide the answer to the above query. So nothing is written in front of the question. That means it's an MTP question. Right, that means it's an MTP question. Someone should see the deed of hypothecation or the other document creating the charge together with the statement of stock held at the balance sheet date. Is it in order? Right, so what should he see? He should see the hypothecation or the other document and the stock statement. For debentures sold, whether the cost of debenture sold is not ascertainable, the book value at the date of sale may be treated as the cost for the purpose of this clause. For bonus shares sold, where bonus shares are received, the number of shares in the portfolio would be increased by the bonus shares, while the cost of the portfolio would remain the same as before. And only the number of shares will increase. Cost of portfolio will be the same. The result would be that average cost per unit of the total holding would come down proportionately. The usual accounting practice for apportioning the cost of a part of the total holding on the sale to take out its average cost. And what is the last one over there? The law of the on the subject has hitherto been that where the consideration for issue of shares is an adjustment against a bona fide debt payable in money by the company, the shares are deemed to have been subscribed in cash. So if you are paying it against a bona fide debt of the company, then they are deemed to have been subscribed in cash. Accordingly, the legal opinion obtained by ICAI, the expression shares allotted for cash, may also include shares allotted against a debt. Therefore, in case where companies, in cases which are covered by the decisions in the Spargo's case, no comment is required by the auditor, even though if the company may have in the return on allotment shown such shares as allotted against adjustment of a debt. Thus, the shares allotted by Varia against a loan taken by it from an NBFC can be considered to be allotted for cash. Right, can be considered to be allotted for cash. Then question number 34. In the audit of ABC Private Limited, statutory auditor come across cases of payment to directors where personal expenses of a personal nature were reimbursed. As an auditor, how would you deal with the same? Right, and again, what does it say? Personal expenses have been foreign trip undertaken on behalf of the company. Right, so all payments to directors as remuneration or perquisites, whether in case of a public or a private private company are required to be authorized as per the Companies Act and also as per the Articles of Association. Articles may provide that such remuneration requires sanction of the shareholders either by ordinary or special resolution, while in some cases it may only require the approval of the directors. If the terms of appointment of a director include payment of expenses of a personal nature, then such expenses can be incurred by the company. Otherwise, no such expense can be incurred. So I told you, no, you need to look into the company policy, whether as per company policy, certain personal expenses are allowed to be charged to revenue account. In the given case, the auditor has to ensure that the above has been complied with, without which, if such expenses are paid, he has to disclose the fact in his report as also in the accounts. In this regard, attention is invited to 143(1)(e), wherein auditor has to inquire whether any personal expenses have been charged to the revenue. Right, and then question number 35. The auditor of Chand Limited did not report on the matters specified under 143(1) of the Act on which he inquired because of the reason that he was satisfied. Is he right? The auditor of Chand Limited did not report on the matters specified under 143(1) of the Companies Act on which he inquired because of the reason that he was satisfied. Yes, if you don't have an adverse finding, no need for you to report. But the management of the company wanted the auditor to report on those matters so that the members can also be aware of the true position of the company. Comment as to whether the auditor is required to report the matter specified under the Act he inquired into and whether the contention of the management is sustainable. No. What does it say? No need to report. The contention of the management is not sustainable. Are you getting that one, everyone? So question number, which question number had we started over there? I think 32, right? 32 or 33. Yes, so 32, then 33, 34 and the 35. All of that is regarding the, right, 143(1). Are you getting the variety over there? Right, are you getting the variety? Then question number 36, which is regarding 143(10). Are you all with me? Right, 143(10). XYZ and Company Auditors of Goodwill Education Foundation, a recognized non-profit organization, feels that XYZ and Company Auditors of Goodwill Education Foundation, a recognized non-profit organization, feels that standards on auditing need not be applied as Goodwill Education Foundation is a non-profit making concern. It says when you're doing an audit of a non-profit making concern, no need to apply auditing standard. Auditing standard is only meant for company audit and so. Right, what does it say? Now, first it gives a reference to 143(10). Then it says preface to the essay. And here they go to the definition of an audit. What does it say? Yes, audit is an independent examination of financial information of any entity, whether profit-oriented or not, irrespective of its size or legal form, when such an examination is conducted with a view to expressing an opinion thereon. Also, while discharging the attest function, it is the duty of the CA to ensure that essays are followed in the audit of financial information covered by their audit report. In the given case, even though if the client is a non-profit organization or a non-profit oriented entity, the essay shall apply and the auditor will be guilty of professional misconduct for failing to discharge his duties in case of the non-compliance with the essays. 912. And fails to invite attention to material departure from the generally accepted audit procedures applicable to the circumstances. And then 3 times question asked in the exam. What is the 3 time question asked in the exam? 143(12). Duty to report the fraud to CG. And a duty to report the fraud to the CG. Right? So do you appreciate this, that even our question bank is having a particular flow over there? Right, such just as the flow of the chapter, in the same flow you see that the questions in the question bank have been arranged. Okay, and now coming again to $1 million discussion over there, which is regarding the duty as to reporting under 143(3). Doesn't matter if there is any question or not, but in the MCQ part or in the other chapters, a lot of this 143(3) is going to be required. Okay, right, do you remember the contents of the audit report? Title, addressee, opinion, basis for opinion, going concern, key audit matters if any, management's responsibility, auditor's responsibility, other reporting responsibilities and signature, place and date. Under this other reporting responsibilities, we report on the matters given under 143.3. Under this other reporting responsibilities, we report in the matters given under the 143.3. Okay, right? If you check this particular report of Reliance Industries over here, what does it say? As required by, are you with me? Right, as required by section 143.3 of the act, we report that. Right, and before that it says 143.11, that is caro, which is given as an annexure to the audit report, because there are 21 points where to put it in the main report. Does that mean that Reliance auditor would not have done the inquiry? They would have done the inquiry, but because they don't have an adverse finding, you don't find it reported over here. Right, so 143.3, we report that, and then these are the additional points on which they have reported. Are you understanding that? Oh my God, right? These are all the additional points. Now, what is the layout of 143.3? Right, what is the layout of 143.3? Are you all with me? Yes, tighten your seat belts. What is the layout of 143.3? Right, there are the 10 points of reporting: A, B, C, D, E, F, G, H, I, J. Under J, you have J, A. A, B, C, D, E, F, and G. Under E, you have E1, E2, and E3. And I'm going to discuss all this with you. So how can, how can the provision be coming? 143.3J, JE, E2. Oh, wow, beautiful. Because under J, there is A, B, C, D, E, F, G. In that E, there is E1, E2, and E3. Okay, right. Why it came? Because of Yes Bank. Okay. And anybody does any fraud, it comes in company law as an amendment. Okay, auditor, you report. It comes on the burden of the auditor. That has already been done. Now nobody will do that type of fraud. People will invent new fraud, but auditor reporting responsibilities keep on increasing. Okay, right. Anyways, duty as to reporting. 10 points of reporting over here. Right. So what are the first 10 points for reporting over there? We have the keywords which we can remember. Information proper. Branch books. Information proper. Branch books. AS adverse. Directors maintenance. Directors maintenance, and then IFC others. So now, like 705, did we require it at many places? 705, right? Similarly, this 143.3 we are going to require at many places. Right, so information proper, branch books, AS adverse, directors maintenance, IFC others. Right, so information proper, branch books, AS adverse, directors maintenance, IFC others. And in addition to that, whether managerial remuneration, whether it has been paid within the limits, that also where you report it under the other legal regulatory requirements only. And whether managerial remuneration paid, whether it is within the limit, where do you report that? You report that also under the reporting on the other legal regulatory requirements. So here what I have given you is just the keywords. What are the keywords? Information proper, branch books, AS adverse, directors maintenance, IFC others. What does it say? Information, right? Information, for that, what is the point over there? Whether the company has sought and obtained information and explanation which to the best of his knowledge and belief were necessary for the purpose of the audit, and if not, then the details and the effect thereof on the financial statement. So whether did you ask? Without asking, you don't get anything, but ethics say not to ask, solicits, and it says not to ask. But to client, should you ask? Yes, client, you have to ask for the information. So whether he has sought and whether he has obtained the information and explanation which to the best of his knowledge and belief are necessary for the purpose of his audit, and if not, the details thereof and the effect of such information on the financial statements. Okay, what could be the effect? And when will I have a negative reporting over here? Only intelligent students make an attempt, others keep quiet. when there will be negative reporting under query, we did not obtain information explanation. Whenever auditor is issuing a qualified or a disclaimer. Adverse, get out of the class. You understand now? Qualified or disclaimer. Limitation on scope. Whenever there is a limitation on scope, we'll say, "Arey, we did not obtain information and explanation, which to the best." And what is the effect? What could be the effect? It could lead to qualified or disclaimer of opinion. Are you understanding that? Okay. Second, whether proper books of account as required by law have been kept by the company so far as it appears from the examination of those books, and proper returns adequate for the purpose of the audit for branches not visited by him. What do you mean by proper books of account? We discussed yesterday, which give a true and fair view, double entry system of accounting, and the accrual basis of the accounting. That is what you mean by proper books of account. Very good. Then, whether the reports on the accounts of any branch which has been audited by a person other than the company auditor, whether those reports have been sent to him under the proviso to that subsection, and the manner in which he has dealt with it in preparing his report. So, whether branch auditors report, have they been forwarded to the company auditor? Next one, whether balance sheet and profit and loss account, are they in agreement with the books of account, right? So balance sheet and profit and loss account, are they in agreement with the books of account, right? So what did we say? Information proper, right? Information proper. Branch books, right? Then whether the financial statements comply with the AS. Then any observations or comments of the auditor on the financial transactions or matters which have an adverse effect on the functioning of the company. Yes, when will you report under this point? Whenever there is a... Now give some different answer, no? Why qualified adverse you want to say? Whether there is any observation or comments of the auditor on because of financial transactions or matters which have an adverse effect on the functioning of the company. Going concern, correct. Whenever there is a material uncertainty related to going concern, it will come under 143(3)(f) also. Then whether any director of the company is disqualified under section 164(2), right? When is the director of the company disqualified? Right? Disqualified, not filed annual accounts, annual returns for a continuous period of 3 years, and also failed in the repayment of deposits or interest thereon for a period of 1 year, right? So director disqualified. Then any qualification, reservation or adverse remark relating to the maintenance of accounts and the other matters connected therewith, right? Then what is the next one? Whether the company has adequate internal financial control and also the operating effectiveness of such control. Right, whether the company has the adequate internal financial controls and the operating effectiveness of the control. And somehow in the formatting, because that next page was so big, you know, they could not cut the chart, so it went on the next page only, and by mistake they did forgot to split it, right? So such other matters as may be prescribed, right? Such other matters as may be prescribed, right? So what does it say? Information proper, branch books, AS adverse, directors maintenance, IFC and the others. Are you getting that, everyone? Right? IFC and the others. Okay, right. What does it say? IFC, statutory auditor of the company, you need to report whether the company is having the adequate internal financial controls and also report on the operating effectiveness of such control. However, this will not apply to a private company, which is a one-person company or a small company. So not applicable to a private company, which is a one-person company or a small company, or a private company which is having the turnover of less than 50 crore and having the borrowings of less than 25 crore, right? And having the borrowings of less than 25 crore. To that private company, statutory auditor, IFC reporting not applicable. To that statutory auditor of that private company, IFC reporting not applicable. Okay, so let me make a question. A private limited, right? A private limited. Again, MCQ asked in the exam, right? So MCQ asked in the exam. A private limited having turnover of 39 crore and having the borrowings from the bank's financial institutions of 39 crore, the statutory auditor has not done the reporting on IFC. The statutory auditor has not done the reporting on the IFC. A private limited turnover 39 crore, borrowings from banks, financial institution 39 crore. The statutory auditor has not done the reporting on IFC. Is the statutory auditor right? No. No. Yes? You don't need to report on IFC when turnover is less than 50 and when borrowings are less than 25. Here one of the limit is exceeded. So is IFC reporting applicable to a private limited? Yes, IFC reporting would be applicable. Same, instead of 39, I make it 15 crore. Then it is okay. You understand? No, turnover should be less than 50 crore. Borrowing should be less than 25 crore. If both the limits have been fulfilled, only then the IFC reporting by statutory auditor of private company is not required. Array, you remember na, Caro, 1 crore, 10 crore. Any one of the limit exceeded and Caro becomes applicable to private limited company. So here also 50 crore and 25 crore. Any one of the limit exceeded and the IFC reporting becomes applicable to the private limited company auditor. Any one of the limit exceeded and the IFC reporting becomes applicable to the private limited company auditor. Are you able to follow this, everyone? Yes. And then what does it say? Such other matters as may be prescribed. What does it say? Such other matters as may be prescribed. Okay. So what I will do, I'll come to SA 570. Do you have the module 1 with you? No, I have it with me. No worries. Okay. Right. So in SA 570, we had one question of that Abhinandan fellow. You understand, right? So we have this facts, okay. And after the facts, we have one question over here of that Abhinandan fellow over here. And in that Abhinandan, array, listen, re. Okay, in that Abhinandan, they said 143.3J. What is 143.3J? Such other matters as may be prescribed. In that the auditor is required to report whether the company has disclosed the impact of any pending litigation on its financial position in its financial statements. Whether the company has disclosed the impact, if any, of any pending litigation. Pending litigation means contingent liabilities and a fighting in the courts of law on its financial position in its financial statement, right? Why? Because here, do you remember that national green tribunal and the regional forest department, that question was there. You understand? So there was the non-compliance. There was the litigation which was going on against the company. So 143.3J. Now I'm not going to write the other matters over here. I'm going to take a separate page for that. 143.3J, which talks about such other matters as may be prescribed. And under that such other matters as may be prescribed, how many matters we have? A, B, C, D, E. Under E we have E1, E2 and the E3, and then you have the F and the G. Okay, under 143.3J. What is 143.3J? A, pending litigations. What I just showed you in the Abhinandan question. Whether the company has disclosed the impact of pending litigations, if any. Then whether there are any material foreseeable losses. Any material foreseeable losses. Then whether there have been any delays in transferring amount to the investor education and the protection fund. Whether there have been any delays in transferring amount to the investor education and the protection fund. Then it says D has been omitted. It was regarding the specified bank notes, that 500 rupees and 1000 rupee note, which was demonetization had happened. It says you had to give the disclosure of that specified bank notes. But now that has been omitted. Okay, it was once upon a time. Then 143.3JF. What does it say? Whether dividend paid or declared. Whether dividend paid or declared, whether it is in compliance, dividend paid or declared, whether it is in compliance with the provisions of section 123 of the Companies Act, and whether the company's accounting software, whether the company's accounting software has an audit trail feature, whether the company's accounting software has an audit trail feature which has operated throughout the year, has not been tampered with, and has been preserved as per the statutory requirements for record retention, which has been operated throughout the year. T is not, not tampered with. Don't write tampered with, right? And it has been preserved as per the statutory requirements for the record retention. How many years the company needs to retain books of account? So much patience is required, no? Okay. But the confidence, yaar, kidhar se? From where did you get this confidence? Okay. Right. How many years does a company needs to retain books of account? 8 years. So how many years this audit trail is also required to be preserved? It is required to be preserved for the 8 years. Are you understanding that? Okay. So what does it say? Whether the company is using such an accounting software which has an audit trail feature, and that audit trail feature did not operate only for 1 day, 2 day, it operated for 365 days, operated throughout the year. It has not been tampered with. Nobody went and made some unauthorized changes to that audit trail. And also, what does it say? It has been preserved as per the statutory requirements for the record retention. What are the statutory requirements for the record retention? 8 years. Right? What are the statutory requirements for the record retention? 8 years. Okay. And now we are still left with the E1, E2 and the E3. Right? So now what the company has done, right? What the company has done, the company has advanced some funds to the intermediaries, whether in or outside India. The company has advanced certain securities, whatever surplus they have, they've given it to the intermediary with an understanding, whether recorded in writing or otherwise, okay, this particular money, out of this money which company is giving to the intermediary, it will be used for the loans, guarantee, securities of the promoters, directors of the company. So rather than company directly giving the money to the promoters, they are giving it to the intermediaries and telling intermediaries that you give guarantee, you give security on behalf of our promoters or so. So rather than eating directly, eating indirectly the funds of the company, right? So what does it say now? If such fund, if you have given money to intermediary and told your intermediary that use it for the promoters, and this has been disclosed in the notes to account, no problem. And it has been disclosed in the notes to account, then no problem. But what does it say? Okay, whether any funds have been advanced, loaned or invested otherwise than as disclosed in the notes to account. So it has not been disclosed in the notes to account, right? With an understanding, whether recorded in writing or otherwise, that it will be used for the beneficiaries, the promoters, the relatives of the promoters of the company or so. What does it say? Auditor, you need to take a written representation from the management. What written representation? Auditor, under E1, you need to take from the management that no funds have been advanced other than that as disclosed in the notes to your account to the intermediaries, with an understanding, whether recorded in writing or otherwise, that the money will be used for the promoters of the company. Because how will I come to know now, okay, whether company has given the funds and those funds are being used for the promoters of the company? How auditor will come to know? No, auditor needs to take a representation from the management. Is it allowed to give such advances? Yes, it says it should be disclosed in the notes to account. But other than as disclosed in the notes to account, whether the company has advanced any funds to the intermediary with an understanding, whether recorded in writing or otherwise, that they will be used for the beneficiaries, the promoters, the ultimate beneficiaries of the company, auditor says, I need to obtain a written representation from the management. So even what you have to report, whether auditor has obtained the written representation from the management that other than as disclosed in the notes to account, no funds have been advanced to the intermediary, with an understanding that further it will be used for the ultimate beneficiaries or the promoters of the company. Are you getting this one, everyone? Okay. Now, what happens in E2? Again, in E2, what we need to do? This is E1. Right? Now, what happens in E2? In E2, again, what we want? We want a representation from the management. But now, what happens in the situation of the E2 is now the intermediary becomes the funding party. Now the intermediary becomes the funding party, and the funding party gives the money to the company, and this money the company uses it again for its ultimate beneficiaries or for the promoters of the company. So again, what does it say? Whether the management has represented to the auditors that other than as disclosed in the notes to account, no funds have been received. So your funds were advanced, now funds have been received. And no funds have been advanced. Here, what does it say? No funds have been advanced. Now, what does it say? No funds have been received by the company, right? With an understanding, whether recorded in writing or otherwise, that these funds will be used for the ultimate beneficiaries of the company. Auditor says, I want a representation from the management. Auditor wants a representation from the management. Okay. Now, what do we study in SA 580? Ke boss, written representation is not a substitute for the normal audit procedures to be performed by the auditor. So, based on the audit procedures which the auditor considered to be reasonable and appropriate, based on the audit procedures which have been performed by the auditor, nothing has come to the auditor's attention that causes him to believe that the representations under E1 and E2 contain any material misstatement. Nothing has come to the auditor's attention based on the audit procedures that the representations which the management has given to the auditor under E1 and E2, that whether they contain any material misstatement. Right, so this is E1, E2 and the E3. Okay, I will give you time to copy down this or I will keep it on over there. But first let us see Reliance Industries report, how they are doing the reporting for this one. Who gave them the grand idea, of giving these new points of reporting over there? Right, anyways, let us start with the simpler points. What are the simpler points? Information explanation, proper books of account. Then what does it say? Balance sheet, profit and loss account, are they in agreement with the books of account? Whether financial statements comply with the AS, whether any of the directors are disqualified. Then company has adequate IFC and the operating effectiveness of such control, annexure 2. Then managerial remuneration paid is within the limit, as per 197, and such other matters. Are you all with me? Right, such other matters. What does it say? Company has disclosed the impact of the pending litigation. Company has made a provision for the material foreseeable losses. There are no delay in transferring amount to the Investor Education and Protection Fund. This by the company except for 2 crore which is kept in abeyance due to the pending legal cases, right? Then what does it say? The final dividend paid by the company in respect of the same declared for the previous year is in accordance with section 123 to the extent it applies to the payment of the dividend. So this year that OTP was not made applicable in this 2022 ka report. That is why you don't see it over there, right? And now what does it say? The management has represented to the best of its knowledge and belief that no funds have been advanced or loaned or invested either from the borrowed funds or the share premium or any other sources or any kind of funds by the company to any person or to any other person or entity, including the foreign entities which we call as the intermediaries, with the understanding, whether recorded in writing or otherwise, what? That the intermediary shall, right? That the intermediary shall directly or indirectly lend or invest in other persons or entities identified in any manner whatsoever of the company, the ultimate beneficiaries, or provide any guarantee, security or the like on behalf of the ultimate beneficiaries. So whether no funds have been advanced by the company to the intermediary with an understanding, whether recorded in writing or otherwise, that it will be used for lending, investing, guarantee, security of the ultimate beneficiaries of the company. Then what is E2 over there? The management has represented that to the best of its knowledge and belief, no funds have been received by the company from any person or entities, including the foreign entities, now called as the funding parties, with the understanding, whether recorded in writing or otherwise. Okay, now the company will use, the company shall, whether directly or indirectly, lend or invest in any other person or entities identified in any manner whatsoever by or on behalf of the funding party to the ultimate beneficiaries, or give any guarantee or security or the like on behalf of the ultimate beneficiaries. And what is E3? based on the audit procedures we have considered reasonable and appropriate in the circumstances. Nothing has come to our notice that causes to believe that the representation given under E1 and E2 contain any material misstatement. Right? Practically, this is so dangerous, and not dangerous, but so difficult for the auditor to check. Practically, you know, how to ask the management that whether you have received any funds, whether, and now other than that's disclosed in the notes to account. What is disclosed in the notes to account? To there, what they say over there, other than as disclosed in the notes to account. The management has represented, what does it say? Otherwise, right? Other than as disclosed in the notes to accounts, whether any funds have been received, whether any funds have been advanced. And also the auditor needs to perform audit procedures which he considers reasonable and appropriate, that the representation under E1 and E2 does not contain any material misstatement, right? Yes, they are asking. Inter students also, they ask this question. What are the other matters which are required to be reported under 143(3)(j? Right, so other matters, now other matters are main matters, like that it has become. Right, so anyways, what is it? Pending litigation, material foreseeable losses, delay in transferring amount, clause has been omitted. Then whether management has represented to the auditor, what they have represented to the auditor, that other than as disclosed in the notes to account, no funds have been advanced by the, yes, advanced or loaned or invested in the intermediary with an understanding, whether recorded in writing or otherwise, that the intermediary will use the money for the ultimate beneficiaries. And again, what does it say? Whether the management has represented, whether the management has represented what, that to the best of their knowledge and belief, again, other than as disclosed in the notes to account. No funds have been received by the company. So here what does it say? No funds have been advanced by the company. E1 and E2, what do they say? No funds have been received by the company. Is it right? No funds have been received by the company from any person or entity, including foreign entities now called as the funding party, with an understanding, whether recorded in writing or otherwise, that the company shall now directly or indirectly use this money for the ultimate beneficiaries. And then what is E3? Based on the audit procedures that the auditor has considered reasonable and appropriate. Nothing has come to their notice that has caused them to believe that the representation under E1 and E2 contain any material misstatement. Right, then what is the 143(3)(j)(f)? Whether dividend paid or declared during the year, is it in compliance with section 123 of the Companies Act? And 143(3)(j)(g), whether the company has used an accounting software which has a feature of recording the audit trail, which has been operated throughout the year, which has not been tampered with, and which has been preserved as per the statutory requirements for the record retention. So OTP, and audit trail is equal to OTP, but T is negative. Is T negative? Yes. Why? Because it says it has not been tampered with. And now don't write it has been tampered with. You understand? No, audit trail is what? OTP. It has been operated, whether the accounting software has an audit trail feature which has been operated throughout the year, which has not been tampered with, and which has been preserved as per the statutory requirements for the record retention. Are you able to understand? What are we discussing? We are discussing the rights and duties of the company auditor, right? So which duty as to inquiry, duty as to reporting, CARO done, signing audit report done, qualifications, duty to comply with the essays done. So now we are left with the duty as to branch audit and the duty to report the fraud to the CG, right? So let's take a break.